Welcome, and here we're looking at the US 30 here, and everything's pretty much on track to move higher, and we should expect new highs shortly. However, getting through new highs is always a little bit tricky. There will be sellers sitting there, and as you can see at 15,500 there, or close to it, these previous highs here, will cause some sort of problem here, and we'll probably be looking at a little move above this particular high point here, and then a sort of a corrective pattern like that for wave 4, and then we'll see wave 5 up through here. The one of the main points here is the wave 4 can be, when wave 2 is quite simple, then wave 4 can be complex, but the main point is that there will be some type of correction through here. Once support is found on the 15,500, or if it's found, which we expect it would, then we'll be looking at the 15,800 from that point for the Dow. So it just depends on what degree of structure that you're trading, either minor levels, sub levels, or medium to higher levels. The S&P 500, we can have a look in a bit more detail. We're looking for obviously a new high above through here as well. Once again, there's going to be slight problems there. But the wave count of this leg moving up through here, there's two counts for this, and look, both of them are positive, which is the good news, and that means that there's further upside. The wave count on our website is one of the counts, and in the day ahead report here we explore other counts, and this is one of them here in terms of actually having this move down through here as a wave 1 and wave 2 to here, then a wave 1 to here, and a wave 2 to here, and the wave 3 up here at the 1700 area, and then the wave 4, but that would still just be up for the wave 3 at that point there, which we would pin in at 1720 there. But that's a little bit ahead of the time just yet. So look, what we're working with now, if we can just drill into this sort of section here somewhat, is that this is just sort of pacing it out here, and this is how I've got this count coming up from here, this wave 1 and wave 2 here, and the difference is we're looking at this as wave 1 and wave 2 here, then a 5-wave structure for wave 1 here, and back for wave 2 of the next degree smaller, and then the next degree smaller once again we'll be looking at a 5-wave sequence through here for wave 1 and back for wave 2, then up for 1 and back for 2 of another degree smaller, up for 3, 4 and 5, up for 3 in brackets, back for 4, and then up for 5 here. So we're still climbing higher here. One of the things here, we do have wave 4 pinned in here, so that means that once wave 5 and 3 here are completed, then we can see a move back into this area through here as wave 4 here. Depending on how strong and how weak the market is, of how far this will pull back. Of course, wave 4's always pull back well, textbook to the 38.2 retracement level. We do have earnings seasons coming, in play, so that's going to, those headline news are going to sort of move the markets a little bit. The other thing too is that the indices, the US indices, have moved up overnight, reasonably well, where the euro and the commodities were a bit lazy, but we expect them to pull through in the next session. They were just catching up in time, but so we should see some strength from them, which would actually help these markets here, these indices as well, push higher. One of the main points here is that, as you know, the market's been climbing through group 2, which is 65, 72 and the 80 here. It created 72 as a really nice support here, and what I mean by that is the classic trading levels pattern, which is the arrival, the reaction, the first high above the level, the correction, and developing support here. So what was resistance is now support. So we can look for this to occur here, but just be mindful that we can get a move back through here. So depending on the degree of structure that you're trading, then you need to set your rules, around those degree of structures. So Look, this situation here can move higher through here, but just be mindful that it can come back through to here before moving higher through there. So you either need to lock in profit above the 1680, and wait for it to become support, because this is the same thing here basically. So, alrighty, the European markets and the Australian markets have a bit of a relationship there in their patterns as well. Now I've also got two counts here for the FTSE, both positive once again. This first one is this one here, which I don't really have a lot of hope for, but still expecting further upside. But yeah, look, I think I'll just move to this second count here, which is a bit more viable really. And from this low here, we can see that we've got 1, 2, 5 waves in here for the third, the fourth and the fifth here for wave 1, back for the wave 2. So that's all really nice and neat and tidy. And then the third wave here is doing its thing properly as well, because it's the strongest in the sequence of the 5 waves. So the 1, 2, 3, 4, 5 here, and it's just a tad longer than the first one, and it's also longer than the next one as well. So from here we've got the 1, the 2, the 3, the 4 and the 5 here. So we do have 5 waves up. So after 5 waves, after an impulse wave, then we get an ABC correction. So that's what I was looking for here. I was looking for an A wave, a B wave into here and a C wave to here. Yes, it can pull back further as well. That will depend on what the US markets are doing. And in fact, after 5 waves, we would normally see a 61.8 retracement level, but I don't expect that to happen from this point here, because maybe the 38.2, because we're working across this medium level here, 65, and the market is likely to stick to that before seeing further upside from here. So anyway, let's just see how that goes. In terms of trading this intraday though, we'd need to have a look at that. Okay, on an intraday basis, this move down here, this move up here rather, it appears to be a 5-wave structure coming down through here. So that would mean that this move here is corrective in nature. So that means we would see a 5-wave sequence to the downside through here. So if that plays out, then that's how that plays out. But if I'm wrong, then this is the closest largest number, the 66 here, and would be looking for, this is resistance at this stage here. We'll need to see a little move up through here and then come back and check it. Yes, it may go below that, but at some point you need it to see that it's actually, it's got support through here, and that's what you'd be looking for. So step 1 on the long side, you'll need the 6600 here as a tested support. And then once you've got that, then you can build in the trade through 10, 20 and 30 here. Support on top of 30, which is the top of subgroup 1, will get you to the 50. You take profit there and wait for the 50 to become the support and move in from that point there. So that's how you'd work it to the upside. Otherwise it's to the downside, and if you're going to short it to the downside, then you'll need the 72 here within group 2 as your retested resistance, and then adding at the 65 as retested resistance as well. The Australian market at the 5,000 here. So let me have a look at this, which is interesting, because this is also at the 5,000 here. This is the 61.8 retracement level. So there's a bit of a double whammy here in terms of possible resistance. But the way that I see this playing out is really quite simple. As you know, we've been tracking this move up through here. It can be a wave 1 or wave 2. And a wave 3 up here once we finish the 5 waves, the 1, the 2, the 3, the 4. So what we're looking for here is we're looking for a little 5-wave structure up through here, making a new high. Once that's done there, then we can expect a corrective move to come in across this 5,000 through here. So we would see it like that. After this correction, if we found support on here, then we can take that high out through there and move in that way through there. But this is the larger 5-wave structure here, the 1, the 2, the 3, the 4, and the 5 here, and then the ABC correction across the 5,000 at that point. Now that's either going to be a high here in terms of the A, the B, and then the C wave through here. So as the corrective ABC counter trend of that whole move down that we've had way over yonder here. So that can be that, or we can have this as not a wave C, but actually as a wave 3 here. So this is something that we'll need to be working out in the sessions ahead, and we just need to see how the Dow and the S&P react at their current highs as well. So and also the metals, the commodities as well. So yeah, right. Let's have a look at commodities. Okay, starting with gold. As you know, we're looking for wave 4 to complete here in terms of an A and a B and a C wave, and the C wave coming up through here is always in 5 waves, and we're currently in wave 4 through here, so we expect failure quite soon here, and just dragging into that here would be the little 5 waves for the wave C here is the it's up for the 1, back for the 2, up for the 3. Now, we were looking yesterday at at this being the wave 4 here, across here, because we had a nice little A, B, and C here. But it's just expanded in time. It's just doubled in, the correction has doubled in time. And what we need to count this now is this little A, B, C down here for the A wave, the A, B, and C for the B wave, and then if you look closely enough, you've got 5 waves in here for the C wave here. So we should see that push up through there. We'll be looking for 5 little waves up through there, and that should complete that structure to the upside there, and then we'll see gold roll over from that point, and that would be the same for silver as well. Looking at silver here, at the $20 point here, the 5 waves up for 1, back for 2, 5 waves in here for the 3rd, and once again we've got that larger 4th wave here as well, so we'll be looking for that to push up through there. That's just the nature of wave 4s, and this also sort of spilled over into the base metals market as well, so they're all in sync there as well. Let me just find my charts here. Okay, so look, same thing as well with the base metals. We're looking for a wave 4 pullback into the 38.2% retracement level, which brings us into the 13 sort of area through here, and that's what we're looking for there. But we've just got this other leg through here, so we need to put that over through here and line that up with the precious metals, and yeah, and expecting move up. So the materials sector should sort of follow, and the BHPs and the FMGs of the world and so forth should have a push up in due course as well through here, in line with this as well. So let's just have a look at BHP overnight here. Oh, it's pretty sort of steady there. So as you know, it was pretty quiet all the way around with the markets last night. It was kind of like even the euro and that were just all sort of moving sideways, sort of filling in time, waiting for some particular event to sort of unfold. But we should see this push up here next time, the same with the euro pushing up there as well, and also the US dollar lower as well. Okay, so for the oil market as well, of the trend that we're tracking, well, there's sort of 2 options here, and one of them is the simple ABC correction that we've been looking at here, the A, the B, and the C back down to the 38.2 retracement level here before we see further upside through here. And of course, oil most of the time follows stock, so we'll just have to check what the S&P are doing at that particular stage there. Now, also, as I mentioned yesterday too, that the Brent had actually made new highs through here on its chart, and that gave a bit of a reason for this to hold its play. That new high really hasn't sort of moved up much from that point. Now it made a new high here yesterday on the Brent. It seems a bit softer on the close here now, so let's just see how that support plays in here. But look, basically this 105 here, 104, 106, 105. So 105 is the sort of balance line for this particular correction here, and while it's above that, then it has the opportunity to move higher. If that became the retested resistance, then look for the price back at the 102. There will be a bounce off the 103 as well, coming down through here, and it may only move to the 103 as well. What we normally find is that the A wave normally has some sort of relationship with the wave C here, so seeing this at 103 is a very high probability here, and a bounce from that point there. So yeah, just allow that to play out there. If the on the upside here, the most important number to the upside here, apart from the 108, is the 106.50. Yes, the 106 is reasonably important, but the 106.50 would be more important. If you get support on 106.50, then trade long from that point there. And when you get to 107, then you've got to look at the 72s from there. So 107.20, 107.72, those sort of numbers there will play quite a strong part in the process there. Right. Okay. All right. Let's have a look at FX. Okay. So with the US dollar at the 83 here, we're expecting it to have a move lower through here down to the 61.8 retracement level, which is just down below the 82.50 here. This move here is corrective through here. It does have support while it's above the 83, so that's the closest largest number, and while the market's above that, then it has support. It's as simple as that. And if it found support again on 83.30, the top of subgroup 1 within here, the 10, 20 and 30, then it's even more positive. So this is the 83.30 here. As you know, if it gets support on the 83.30, then you always get to the 50. But in this particular case here, we can see that from this high point here, we've got this little sort of 5-wave structure here down for the 3rd, the 4th cross to here, and the 5th to here, at least, the complicated 4th here. So this 5 waves can be the A wave and a B and a C here, and finish here and move up from this point here, but it would need to have tested support on that 83.30 there. So if that's the case, that's the point at which we're wrong. Otherwise, we'll expect this to find the 83.20, the pivot within group 1, the 10, 20 and 30 is group 1, subgroup 1. If this becomes the retested resistance in here, then we know that we'll be coming lower from that point there, down to the 82.50. And it's important to understand that little bit here, because when we come to the euro, with the euro here, we're looking for the euro to have tested support here, but also to move up from this point here to finish its other leg up through here as the wave C of wave 2, and we'll be looking for short positions up in this area through here. So we know that once again, a little bit like metals, gold, precious metals and base metals, we had this this move down through here as the A wave, the B wave and the C wave to here, but we've got this extra move coming through here, so it's best labeled like this, and pretty much the same as the gold and the base metal. So we can see that you know, that they're in sync there. So we feel that the share market's pretty strong as well, because this is the VIX indicator here, and as you can see, there's no the fear indicator. There's no fear coming into the market, so this is really moving down through here. There's a wave count on this in the forex section as well. So we can still expect the stocks to move up, and that would give the US dollar a nudge to the downside, and this to the upside. So in trading this, though, probably the best situation would be support on the 131 would be appropriate. But if you wanted to get in early, then the strongest number around here would be the 130.72 there. So look for support or tested support on that number, and moving along from that point. While this market is above the 130 here, then we need to treat it as positive because it's the closest largest number. If this becomes the retested resistance, then we know that there's an error made, and the error would be that wave 2 would be tucked straight in here as such at this point here, because this is the 61.8 retracement area through here, and the market would work lower from that point there. But we just need to give it some time to work itself out, and this is how we see it. So the Australian dollar is doing its little bounce off the 90 here. And if you're trading this long, let's just go and we're still looking at this wave 4 here, and there's a couple of ways to count this, and I've got in this section, I've got the wave 3 on this low here, and looking at this as an A, B, C here for the A wave, the B wave down through here, and the C wave up just for the A wave here, then the B, and then the C. A very complicated sort of situation, but this is the bounce that's occurring from here at the moment. So just drilling down into that, and from that current low, from this current low here, we can see that we've got a little 5-wave structure up through here, and then we've got our corrective move across here, but we're gaining support on the 91 here, so that because we got 5 here, we should see another 5 to the upside there. So look for support on 91, make sure it's tested properly, and then start scaling into group 1, the 10, 20 and 30. And remember, if support is found on 30, then you get to the 50, and you've got a choice there to take money off the table and wait for that to become the support rather than the resistance, a little bit like this. So it comes to the level, you take the money, and then you wait until it becomes support. You can recognize it in your own way that it is support, and then you move in from there. It's trading to me is a game of support and resistance, and money management. And the idea is to, recognize what is support, and the other side of that is the reason why we use Elliott is to understand that that we're in on the right side, because if we see 5 waves, we know we're on the right side of the market, so to speak. Alrighty, I think that's it. So good morning, good luck, and thanks for listening.